Most people in America think investing is something complicated, something only Wall Street professionals or rich people understand. But the truth is, investing in the US was built for everyday people. People working 9-to-5 jobs, students trying to get ahead, young adults figuring life out, or families trying to save for their future. If you have zero experience, you're not behind. You're actually in the perfect position, because you're starting before the consequences of waiting hit you. Here's the reality many Americans don't notice. If your money is just sitting in a regular checking or low-yield savings account, you're already losing. Inflation in the US has been slowly eating the value of every dollar. Prices rise, rent rises, groceries rise, utilities rise, but the money sitting in your bank doesn't grow fast enough to keep up. You might feel safe, but your money is shrinking. That's why investing matters. It's not about gambling or becoming rich overnight. It's simply putting your money somewhere it has the chance to grow faster than inflation. But before you even think about investing, you need a small emergency fund. Life in America can get expensive very quickly. Car repairs, medical bills, rent changes, job layoffs. Without a little cushion, you'll be forced to pull your investments out early when the market is down. Having even 1 or 2 months of expenses in a separate savings account gives you breathing room and protects you from making emotional decisions later. Once you have that safety net, starting becomes way easier than most people imagine. You don't need thousands of dollars. You don't need to be a financial genius. You just need to understand the beginner-friendly investment options available in the US. Index funds are one of the best long-term tools for beginners. They automatically give you small ownership in hundreds of American companies, from tech giants to energy companies. So if one fails, your money is still safe. ETFs work the same way but are even easier to buy. Blue-chip stocks like Apple, Microsoft, Costco, and Johnson & Johnson have proven stability. And if you want nearly no risk, US Treasury bills, I-bonds, and money market funds are extremely safe options. Most beginners are shocked when they learn they can start with $5, $10, or $20 using apps like Robinhood, Fidelity, Charles Schwab, SoFi, or Vanguard. You don't need a huge budget. A small, consistent habit is more powerful than a huge investment made once. When you invest the same amount every month, you naturally avoid bad timing. You don't need to predict if the market is high or low. The habit itself protects you. But be ready for this. The market will go up, and it will go down. That's normal in the US economy. It has regular cycles. But long-term investors don't worry about the short-term noise. Historically, the US stock market has always recovered and grown stronger. The longer your money stays invested, the more compounding takes over. Compounding is the quiet force that turns small, consistent investments into something huge over time. It's slow at first, painfully slow, but once it gains momentum, it becomes unstoppable. To actually get started, all you need is an investing app or brokerage account. In the US, the most trusted options are Vanguard, Fidelity, Schwab, Robinhood, or E-Trade. You verify your identity, link your bank, and you're ready to invest in real assets like index funds, ETFs, and stocks with one tap. But here's something every beginner needs to know. Avoid hype. Avoid get-rich-quick trends. Avoid following random stock picks on TikTok or Reddit without understanding them. The biggest losses beginners face come from chasing fast money and panicking during dips. The biggest wins come from calm, consistent investing over years. And here's something most people overlook. Investing becomes easier when your income grows. Whether it's freelancing, remote work, editing, graphic design, AI tools, marketing, coding, or side gigs, the US has endless ways to earn extra income. Even an extra $100 to $300 per month invested consistently can completely transform your future. When you're starting from zero experience, the biggest obstacle isn't money, it's mindset. You need to accept that wealth is built slowly. You need to realize that small amounts matter. You need to trust the process even when you don't see instant results. And you need to understand that doing nothing is far more dangerous than starting small. If you feel overwhelmed or unsure, that's normal. Every successful investor in America started exactly where you are, confused, uncertain, nervous. But they didn't wait to feel ready. They took the first step, and that step changed everything. Today can be your step. Start small, stay consistent, and let time and compounding quietly build your financial future. Years from now, you'll look back and be grateful you started, even if the beginning felt tiny.